You're listening to the REITE Club podcast, where the focus is all about helping you grow your real estate investment portfolio and live the life you want to live. Come grow with us and join our community at thereiteclub.com. And now your hosts, Sarah Larby and Alfonso Salemi.
Yeah, and that's what the confusing part is, that, you know, in time to time we meet them, and or even, you know, especially on the residential side. On the commercial side, I guess it's more of a job, like how many people can buy, you know, $1 million buildings, right? So how many can you buy yourself, or that kind of thing. But it's, you're giving that advice of investing in real estate and then not actually doing it. You know, that I don't know, that it's like saying, here, this is really awesome pizza here, but I don't eat it though. You never see me eat it or talk like so. Okay, so talk a little from the multifamily. Are they still in Waterloo, or where are those multifamily properties located? How did you acquire them? Let's go through that.
So geographically, initially started in Waterloo. So for those outside of Canada, that's about an hour and a half west of Toronto. Then I moved in to starting to go downtown and buying properties there. But the multifamily properties, the first one purchased was actually in Hamilton, Ontario. Again, about an hour west of Toronto. Call it, you know, Toronto's Brooklyn. So New York to Brooklyn.
My favorite city in the world, my hometown, Hamilton, Ontario.
It's really okay. There you go. And that was purchased. We purchased that one 3 years ago. It was 11 units. At the time, it was 1.2 million. Where, you know, now who knows where the market's at, really, unless you really look at the comparables. But yeah, we purchased that property off of a owner that was kind of in the end of his career. He was trying to get rid of that asset, and yeah, that was the location that we bought the first multifamily.
Cool. And so, talk us about, like, okay, so you were acquiring that. How did you put the financing together? Did you qualify for that, or?
And also, what kind, like, what, when you say multifamily can be
Yes,
duplex up to you know, 1,000 units. Like, when you say multifamily, what do you mean?
Yeah, so multifamily for me, I mean 5+ units. So multifamily apartment. This particular apartment was a 3-story walk-up. So it was kind of terrazzo floor, your typical apartment building, 3-story, no elevator. The financing for that. So the way I got into real estate through the student rentals, I think at about third year in university, I was up to four properties. Those ones there was a point in the market where I think probably about 5-6 years ago that I ended up starting to sell them. They had appreciated quite a bit. I was no longer in Waterloo, and I was looking at moving to more commercial investment properties, which obviously you're going to need more of a down payment, more equity. So I sold those properties, and with the funds from those properties, that's what I was building up to be able to buy my first apartment building. That coincided with actually going to our discussion about agents that don't invest. Well, one of the agents that I worked with, he actually is on the sell side of apartment buildings. So he's selling these very large apartment buildings, $20 million, $30 million apartment buildings, but he'd never invested himself. And I was like, you have all this expertise. And I had enough, you know, I had a portion of money saved up. He had a portion of money saved up. I had a lot of debt because I had properties. He had never bought a property before. And just our demeanor, our personality jived really well. So we put the cash together and we bought that property in Hamilton. And what we did was CMHC loan. Again, for the Americans, call it agency debt. And we got pretty favorable debt, 30-year amortization, and that's kind of how we put that together.
So, and at that time, that was, I'm going to assume, the largest deal that you've been working on, or largest project you've been a part of.
Yeah, personally, that was the largest.
Wow. So when you're going through that now, you know, you've done the student rentals and now you're moving into that. What was kind of like the, like, holy shit, like, kind of what were you like nervous about? What was something that you're like, you had to check off in your brain to kind of move to that, you know, to get her done?
So it's funny. It's like everybody in real estate, I feel, has a little bit of pleasure in kind of the craziness of buying something that you don't think you can afford. And I think the part for me that was, you know, dealing with student rentals, I've always recommended it for younger people in real estate, because you do see a lot of craziness, but it's almost like you get training wheels because you got the parents paying, but you have really crazy tenants because they're kids and they're kind of a mess. So it's like you get a little bit of the volatility, but also, like I said, those training wheels. So what kind of, scared me a little bit when we first saw the one property in Hamilton, we saw a unit, and from Hamilton, you have some really good areas and you have some really sketchy areas, like most towns. Yeah. So we went in to see the first apartment building, and mind you, my partner had never invested before. So we go into a place, and I've told this story before where the owner takes us through, but just says, we'll skip this unit. And right away, I'm like, okay, what's going on here? Find out that, and this happens, it's unfortunate. The gentleman that lived there passed away the night before. So we go to see this apartment building, and this obviously freaks out my soon-to-be partner. And it just kind of reminded me, like, there are some things here that, you don't face as a non-landlord every day. And, you're dealing with human beings, which has always been the hardest thing in my career in real estate, has always been the human aspect. It's been the tenants. It's never been, the roof, something's wrong with that, or something's wrong structurally. It's having an issue with tenants or with people. So that was kind of reminded me that, you're taking on more responsibility. You have a lot more tenants under one roof. There's a lot of positives with that, but also you're responsible for a lot more. So that was kind of it there.
Yeah, that's kind of, having walking through that.
Do you use a property manager?
Yeah. So in Waterloo and in Hamilton, we use property management. Being an hour away from the asset, I live downtown. I've always, gone into places that I would invest, and I usually talk to 2 or 3 property managers, kind of, vet them before making any commitments. And yeah, we have a great property manager in Hamilton.
That's key, because you're juggling a lot of different balls with that many different properties, and then being that far away as well too. I think that's almost, some people look at it as a disadvantage, but it is an advantage, where your systems actually have to get stronger and better when you're not on location at that property. So maybe for those listeners that are wanting to get into the multifamily, or maybe just acquired a few or acquiring more, what are some tips if you're vetting that property manager, that it's your property, but they got to take care of it, or they got to care about it like that it's theirs. So what are some, characteristics that you look for?
So I actually recently just, I think it was Saturday, we did a video on Bigger Pockets about property management. And I mean, I always say it's a little soft, but the first thing is integrity, and you can't really manage that. You don't put it on a job application, but you have to understand that it's just human nature. You're going to care more about the property than a person that doesn't own it. So you have to acknowledge that, but also understand that you can put systems in place, internal controls, so that when you do have somebody that they're going to care about it, they're going to be respectful of the tenants. They're going to act as a good conduit between you and the building. So for me, it's being able to screen right away, talk to 2 or 3 managers, get referrals, have systems, like I said, in place when it comes to financial aspects. One of the things we do with our managers is, any expense over a certain amount is something that has to go through an approval process. Sign a proper contract. There's so many people, you have a property manager and you never really sign an actual contract with them, which is crazy to me. Have a legal document outlining all the situations. Obviously, it's not going to be exhaustive, but just kind of a base case of, if this happens, what are the steps that need to happen? One other one where I mentioned in the video, and some people pushed back a little bit, was about the banking systems. So some property managers like to run everything out of their bank accounts and send you statements. We do it a little differently. I give my manager access to a bank account, but I give him access to, say, the checking or one portion of a larger bank account. And we will funnel money as tenants pay into that as kind of his capital reserve or just expense items. So he can pull money out, but it has a cap, say it's $750 or $1,000, so that, he can't take out more than that. Mm-hmm. But it allows him a little bit of autonomy to operate. So those are a couple of things. I think references are number one for me, because you hear from other people, what type of person, you're dealing with or company.
Yeah, that's a really, really good tip to kind of, you want them to have that, like you said, that autonomy, that power, but to a certain extent.
Mm-hmm. Yeah.
Thanks for listening to the REITE Club podcast and joining our community of real estate investors online at thereiteclub.com, where the focus is about helping you grow. We look forward to seeing you again next week. Thanks from your hosts, Sarah Larby and Alfonso Salemi.